Julius. What do you think Victoria market will work on in the new capital gains tax environment?
It depends on where you buy in Victoria. So at this stage, a lot of investors will. It's about the sentiment as well. So there are a lot of investors who are struggling to afford the property due to the multiple reasons. The few reasons are like higher the interest rate payments, plus the land taxes, plus all the other state taxes. In Victoria, when you look towards the regional Victoria, there are few good pockets which are not impacted because of the Victorian government policies yet. So for an example, if you go towards the Wodonga, if you go towards the Bendigo, part of the Shepparton, Latrobe, it's okay. Towards Melbourne, I can see there is a lot of distress within the population because of the two main fundamental reasons. Number one is property prices are not growing because of the fact that the land prices are not growing, and there is significant amount of land which is going to be released in pipeline. Also, there are a lot of houses which are being built. The two different things. So basically at this stage, the new construction which is coming up in Melbourne with the new home and land packages, the prices are still in between $600,000 and $650,000. 4 or 5 years ago, the similar type of properties were selling at the same prices, and the biggest reason behind it is because of the supply of the land which is still coming into the pipeline. Because of the higher supply, property land prices are not growing. In Sydney, the property prices grown, Adelaide or Perth or Brisbane, they grew because land prices have become double or triple in last 5 to 6 years. In Melbourne, what I've seen is basically towards the western side or northern side, wherever you see a lot of supply. In 2018-19, the prices were very close to $400 or $500 per square meter. They're still touching $600 per square meter. There is a marginal upsize into the land prices. That's why the Melbourne property prices are not growing at this stage. Holding is extremely tough because of the land taxes, because of the lower yield, because of the higher vacancies. So rental rises are not happening. More properties coming into the market. That's why market is a bit softer, and there are more and more investors are putting properties into the market. So at this stage, buying a property in Melbourne's northern or western corridors are not good as per my analysis. It might have an impact later, or probably there will be time when the Melbourne will come into a mainstream, but not at this stage. Then when you look at the Victoria as a state, regionals will do a little bit better, but not exactly into the Metro Melbourne. Metro Melbourne, yeah, there are a few pockets which are dominated by owner occupiers. Like if you go towards the Glen Waverley, yes, there is good demand. Go towards the Casey Council, there are a few pockets which has good demand. Wherever you see a owner occupied demand, these pockets might sustain. But wherever you see the higher investor demand, there are a lot of investors in the market, a lot of land supply which is coming up, which is not good for the growth.
Can you give an example of a high growth suburb and the analysis breakdown based on the key matrices you have outlined?
Yeah, of course, yes. So I can only talk about what we have done 2 years ago because these pockets already grown and then they're already in market. So basically look at the entire Playford Council 2 years ago, $350,000, now 100% growth. Look at the Albury Council where property prices were in between 300 to 350, now touching 600 for the entry level properties versus those properties were into a 4-bedroom, 2-bathroom configuration for 550 to 600. They are touching around $800 to $900,000. Look at the Dubbo, we have started early. We were in Wagga Wagga region early, then second cycle of Perth, when a lot of people were just exiting Perth and moving towards Melbourne. We bought a lot of properties in Perth. Mid last year, most of the councils in Perth, like Thornley, for mid 500. Now it's touching $1 million. We bought a lot of properties towards the inner CBD of the Perth. When a lot of people were just buying in towards the Rockingham, we were buying towards the Wanneroo Council. So now Rockingham is sitting at $800,000 to $850,000, depends on the property type. Wanneroo, like Tapping, Karamar, Hakam, these properties are touching around $1.1 million. So that's kind of research we are talking about. So what are we doing now? That is just classified for clients, but yes, these are the few examples what we have done in the past.
What do you think about Whyalla, South Australia? It's under 500K, it can be on high growth area. Which parts of Whyalla? Thank you.
Yeah, Whyalla, I was looking at Whyalla when Whyalla was $180,000. So it's not only about $500,000, it's only about how many percent growth it had been through from last couple of years. Whyalla, yes, there are few infrastructure projects are announced but not under implementation. And then population growth is not very strong. So it's not always important that It's not a bad location, but it's not a great location to get in now either. So there are a lot of good locations where we can still get into and make good profit rather than getting into Isla. In South Australia itself, if you want to spend $500,000, then if you can literally, if you can just change the asset type, then probably you can try to find something in Metro Adelaide. So it always depends on if you want to spend $500,000, where you want to invest. Waila is not bad location, but it had been through a significant growth from last 2 to 3 years.